Good afternoon, everybody, and welcome to Tech Talk here at MarketStream.live. My name is Joseph Cusick from the Cusick Group, securities offered by MoneyBlock. Let's jump in and take a look at about 4 or 5 stocks that are going to have earnings over the next 12 hours. I think they're notable. They represent the majority of the offensive sectors that we keep an eye on, as well as some counter-cyclical sectors. So let's jump in with the market in the red. Let's take a look at our first one, which is in the healthcare space. It's actually an insurer, Aetna. Ticker symbol AET. Stock's trading at 116.29. Now the stock is already down at $1.16 today. And the options right now are pricing in going into this event and through the next 4 days that the stock could have a range of either up $4.22 or down $4.22. That means we could see it as high as 120 or as low as 112. Now the implied volatility rank, that's our rank basically that gives us an idea of whether or not there's an expectation of big violent moves either up or down in the stock. In Aetna, the rank comes in at 33. That's on the lower third of expectations of potential violent moves. If you get to 50, that's heightened expectation. And if you get above 60, 70, that means that there is a very large expectation of a potential very violent move either up or down. Now, critical levels in Aetna that you're going to want to watch. Stock's trading at 116. It's been in a bearish trend. It's been under pressure, especially now that we don't know the repeal of Obamacare, when and if that's going to happen, what parts of it, what's the backup plan or the new plan. But the insurers have been hit, and especially into this earnings season, we're going to watch that very closely with the policies from the Trump administration now being rolled out. Levels you're going to want to watch. First one you're going to want to watch is 118. That's long-term resistance. Right now with the stock trading at 116, you need to get above that level. That's the 200-day moving average. The next level you're going to want to watch is 121. That's that short-term 20-day moving average. That gives us an idea that the bulls, the short-term bulls, are getting really excited about the stock. And then 125. That's that intermediate trend, and that's resistance right now. That's where the institutions, if we get back up to that level, you could see that they might be adding to their positions at this juncture, especially if there's a break above 121, 118 and 121. Now let's take a look at a luxury name, Coach. Ticker symbol COH. Taking a look at the stock right now, trading at $35.99, up 41 cents today. Now, the options are pricing in for the next 4 days that the stock could either be up $1.98 or down $1.98. We'll round to $2 just for math's sake. That basically is getting you at a level where the stock could be as high as almost $38 or as low as 33, let's just say 34 bucks. Now, with the implied volatility rank at 56%, there is a heightened expectation of potential violent moves in Coach. Critical levels that you're going to want to watch. The stock currently is trading at 35 bucks. You want to watch the $34 level right now. That'll be a critical level to watch. And I think, again, with implied volatility rank at 56%, watch the implied move. That $1.98 over the next 4 days, that could be a pretty decent move, especially with the stock up 41 cents today in front of earnings tomorrow. Taking a look at large cap oil stock, one that has been a laggard in the energy space and has been drawing down a tough space as it is right now. As a matter of fact, oil is now leading the downside today, down about 2%. Now, ExxonMobil is one of the largest cap oil stocks out there. As a matter of fact, it makes up of the XLE and in the USO, I think it's about 11% of those ETFs. Now, XOM is trading at 84.27, down $1.24 today. As I have stated, it has been the laggard of this sector. The options right now are pricing and going to the event of earnings tomorrow of a range of about $2.21. It's already moved to $1.24, so you're seeing that half of that estimated move has already taken place, and the energy sector is under pressure to the downside. That means that we could see continued downside, maybe as low as getting into that $83 level, or it could bounce back and we could actually see it in that 85, 86 level. Implied volatility rank, though, is only at 8%. So this move right now, right around that 1.5% to the downside today and 2% for the next 4 days. Very interesting. We'll keep an eye on this. 86, 73, 87.91 and 88.32. These are levels that have to be retaken if the bulls are going to take back and get some traction in XOM. Otherwise, they're going to have a tough case for this large cap energy name to move to the upside. Telecommunications stock I want to take a look at. Sprint, ticker symbol S, trading at $9.07, currently down 15 cents. The options over the next 4 days are pricing in a range of either being up or down 74 cents. You're looking at almost a 7% move being priced in to this telecom wireless provider, Sprint. Implied volatility rank, though, low at 20%. Not a heightened expectation of big violent moves, but they're still pricing in the potential for almost a 6 to 7% move in the stock. 884, 845, and 609. These are levels that all have to be held on the short, medium, and long-term basis if the bulls are going to stay in control in this telecom name. Finally, we're going to take a look at a transport name, UPS. UPS is trading at 116.73, down at $1.36 already today. That's basically in sympathy with the rest of the market. Now, transports are one of those sectors that you want to see outperforming the market. That's a good sign for that the domestic economy will be chugging along, and that's going to come into question, especially as we start to see what are the actual Trump administration trade policies. With that being said, over the next 4 days, the options are pricing in that the stock could be in a range of either up $2.87 or down $2.87. That means we could see it as high as 119 or as low as 113 and some change. Implied volatility rank is coming in at 26%. Again, very low, so not a heightened expectation going into earnings that UPS could move a ton. But we're going to watch 115, 20, 115.88, and 109. Those are the levels that the bulls are going to have to maintain and gain some traction, especially if a pullback at 115.88. Watch that closely. If we get a pullback, which is being priced in there right now, that could put this current rally in UPS into question. All right, folks, that's it for Tech Talk. Join me at 4:30 Eastern Time here at MarketStream.live, where I'll be wrapping up the closing bell. See you then.